Alright, hello guys, glad to have you on board again today. Sorry, there will be no weekly update this time as I had unexpected stuff going on, not to mention COVID related stuff. Basically, I have my son at home, which seriously limits the available time I had to record these weekly podcasts. So this one will pass. Of course, I'll record it next week, hopefully. Still, we have things to talk about. I wish I could have done it earlier because we had several daily candle closes since the signal occurred themselves. But still, we're going to do it today, rather later than never, but still going to have to talk about these things. So, lots of things has changed, and I've already shared my Bitcoin 2022 year predictions plans, or basically my major tradable structures and plans in my mind. As always, no one can forecast the future. We always have to readjust. This is where you'll see the difference between the bullshitters and the actual traders. And so here is the first readjustment for 2022. Things didn't really go as planned, and therefore I need to reassess. Do I need to change the whole fucking plan, or do I need to just readjust a bit of it? So this is very likely going to be the second option, even though I'm still going to be open-minded. First, some further down the road negative perspectives, even though I do think we definitely have made the bottom. So I explain everything about it. What are the major key structure plans on these multi-time frame trends that we've assessed into the 2022 year review and projections, and also assess what the new factors needs to be accounted in. So let's sum up the core stuff. We do have multi-time frame trends due to the fact that the daily chart is trending, but the weekly as well, and the monthly do as well. Okay, sorry. So then the thing is all about how to structure these multi-time frame trends, because we have a complex mesh of situation of the higher time frame. We'll plot some trend following opportunities on the daily ones and so on. So this is complex, and I'm definitely not going to dive into all of the complexity of that stuff. Just push it toward the conclusions. Normally in these patterns, we follow the daily trend until, of course, the weekly trend sets itself right after the end of the daily trend. And then when the weekly trend terminates itself, normally it still follows the monthly until the whole structure terminates itself. And normally the monthly chart reference, which is the major trend, is generally going to look like a parabolic thing. Okay, it also is normally derived up because this is no such a thing as a bubble. The difference between multi-time frame trends and bubble is that multi-time frame trends do prepare for that trend and do shift the value over time. So this is just like constant growth, and these things will look for parabolic type of structure and will require, of course, to use parabolic scales as well to see them normally. But this is no more than just rare markets in which adoption and growth is going to be significant and spread out through multiple time frames all at once. So this is what we have on Bitcoin. Then we need to figure out what is the intermediate maturity of all the intermediate time frames that play their games into this big mesh of 3 time frames trending all at once. So we do figure out what the daily maturity is first, and when this one will be terminated, then we'll switch to weekly reference chart time frame and so on. And we'll of course try to hold the profits from the lower time frame references into the bigger ones to maximize the profits. But the thing is that, of course, maximizing the profits in here will create kind of cubic returns to the initial trend that we would have been traded if we were just going for the major reference time frame. So cubic returns means that this of course comes with higher and definitely much more complex risk limitations. So that's why it is really for experienced traders only to deal with. But understand it that way, okay? As long as the daily trend hasn't terminated itself, meaning broke out, pullback, and final accessed, the weekly trend will not set itself. So we're still in the daily reference. We had everything we needed for a mature pullback in here because we had a kind of a weird distribution to accumulation pattern that I said we still do not have a third range boundary for this range, but we're going to account this as being a mature range due to the distribution and accumulation weird stuff that altered the structure itself. That was an assumption that we made back then. Therefore, I kept on being bullish, and even though I was earlier in 2022, I figured out the probability to maintain higher low points and higher high points towards the creation of a final excess, meaning that we should be plotting the value above the previous all-time high and create a market finale structure that should be bring us above the resistant context. So basically, that was the major plan and the most probable one to follow. So in that perspective, that was my 2022 plan. But still, things were conditioned to some areas not to be reached out to. The first things is, of course, I said it clearly, if we ever retrace down to this previous and therefore lost daily support, we're going to have eventually some trouble. The thing is that we had these problems by flushing it out and going out there, but this could have been just a one-time event, kind of a flash crash, whatever, and then we could have restored. So back then, I had not enough information because we were needing for candle closes to settle back there. Though this thing happened, then we've ranged for several weeks, and then we finally get back there, where the market, once again, sent us new signals. I had to risk limit the probability to trigger invalidation or go bullish again. And in that perspective, we will just have reacted positively on a horizontal daily support. Well, I had the algorithm detecting that a bullish range structure could set itself, and it would definitely have been the case. Remember that we have higher high points on this big range. We could have definitely built higher low points and then created this kind of wedge structure that I had highlighted on the 2022 year plans. But the thing is that, I said it clearly, we lack of a signal. Though in that perspective, the market could definitely react bullish, but we still lack of a bit more risk limitation. Though the market gave us the answer, it broke violently through this level just over the course of a weekend, very violently, and now we're trying to recover, meaning that we have everything we need. The technical structure still stands for this level to be the major driver of price action in the short run, because as long as we maintain prices below, the pressure is to the downside as well as the sentiment. So the sentiment is very weak, everyone is thinking about bear market, whatever. The only thing we have is not such a thing as a bear market. There is still a probability for invalidation, but to be really honest, all I had in here is the invalidation of this to be the final excess. And everyone is mixing all of these things together because, once again, multi-time frame trends are complex shit to deal with, and everyone is trying to give up their conclusions. So let me give you mine, because this is my strategy, okay? So I know it much better than you probably do. So listen carefully. Multi-time frame trend is a big mess. But as long as we do not terminate the daily chart structure, meaning a final excess properly plotted on the charts, there's no such a thing as cancellation of the higher time frames, okay? So, well, let me be real clear. All we have in here is that we've built a third range boundary, proper one, on a double top structure. And we've actually managed to settle the value a bit higher, but certainly cannot manage to sustain over there much longer. So this is a double top type third range boundary. So this, what we're doing now, is no more than a fourth range boundary. Could have been a bullish one, which I definitely thought was the most probable, reason why I certainly didn't trigger any such a thing as an invalidation, but I bought the 40K level. And now that we're lower, all I see is even more bullish opportunities to the fact that we have cheaper coins but still in the same perspective. The daily chart is still plotting the same old fucking pullback. It's just that this is the weirdest ever type of pullback, distribution to Wyckoff accumulation, then fake breakout in which we didn't even manage to create the final excess. We just double top rejected, which is the worst case scenario for those who bought the all-time highs. Huge and painful retracement in which we didn't even touch the trend channel. So is there such a thing as a bear market in here? Fuck no. In order to get a bear trend, we need to reject the trend channel and make lower low points. So there is no such a thing as a bear market construction. All we have in here is a wrong footing pattern. The market's just going on the opposite direction to fuck it all up and to let you believe this is bearish, but all we have is a complex range. It's no more than that. Was this the most probable structure? Definitely not. So I think I've made absolutely no mistake in the risk limitation. I just think that, once again, professional traders knows that forecasting the future is not possible. Adjusting the risk limitation is. And in here, I see absolutely no reasons to change the bigger time frames perspectives. All I see is that we just experienced a much more complex range situation in which, to be honest, out of 10 years experience in the market, and I haven't seen everything about the market, this is the first of a kind that I've seen in very complex ranging structure, still, the maturity of this multi-time frame structure is that we're experiencing the daily pullback. And there's no such a thing as maturing the higher time frame until we finally accessed this one. So what's left of us for 2022 or eventually even 2023, because the market makers are playing with time, is that, I'm sorry to say it, guys, but nothing has changed. It's actually made things even more bullish. My 22 plan take an account two things. The first one being that we would very likely not reach out to $100,000. Now I'm going to take this one off the table because, to be honest, what we're going to probably do now is to double down on the latest bear wave that we've made, leading me to believe that what's next for us to come is to port this up, which means we're very likely going to double down on this range, and this one sets the target slightly above 100k. So I'm changing my plan on this perspective. Can we make 100k this year? I think we possibly could. The thing is that the target is right at 100k, so it could be slightly below, like we just take that as a market driver, like we're gonna get to 6 digits Bitcoin, whatever. Okay, this could be a thing that could never happen, but to be honest, I definitely think we're gonna get very close to it. So either we're gonna make it or fail slightly below, but we're gonna get there in 2022. I definitely think that this is now the most probable. So what we've done is no more than creating a deeper daily pullback, which will create even deeper final excess targets, or further higher final excess targets. So I haven't changed my plan. Certainly did not. All I know now is that what I thought back then to be the beginning wave for a final excess is not. It's just have been a fake double top pattern that extended the daily pullback into some very, very wrong-footed patterns. Of course, the sentiment is as weak as it can be. So how do we trade that efficiently? Let me be real clear. If you bought some Bitcoins back then, late summer last year, well, in that perspective, buying the same price once again makes absolutely no sense. You've already bought that pullback. You just had a wrong footing. Basically, the market tells, well, wrong timing, folk. Just take a little bit more time and it will play its game if you're patient enough. So if you bought last year, be patient. It's the only thing you can do now. If you didn't buy, like personally I did not, because back in the last summer, most of my cash has been pulled into altcoins like atoms or stuff like that. So I did not buy Bitcoin last year. I'm doing it now because the same prices are offered once again. So let's think of it that way. If you already bought last year, there's nothing for you to do but to wait and be patient, and do not certainly consider this as an invalidation yet. There's no such a thing down the road in terms of probabilities. That doesn't mean it won't happen, because of course everything can happen. So if you're using leverage because Bitcoin can only go up or whatever, if you're dumb enough to take too much leverage and you're going to be pulled out by the market makers, then don't come cry to me. I never said to use leverage on the top coins like ETH and Bitcoin. They will definitely be at higher prices years from now. I do definitely believe that, but that's a belief. So if you are ever using leverage, this belief can transform into your entire account being liquidated if you're being proven wrong. It's not going to happen to me. These things are not going to zero, and therefore I'm not going to lose my money because I own the coins no matter what happens. Okay? And this is the big difference. Because we do not know. There is an infinite potential price to the upside. There is no infinite potential price to the downside. There is a rock bottom solid zero level. These coins will never go to zero. Never gonna happen. They can retrace. I mean, 20k Bitcoin makes no sense, but it can happen. $0 Bitcoin, not a chance that it happens. Okay? I hope you understand that. There is unlimited forecast to the upside, very limited forecast to the downside. Still, the daily pullback is what's at play now. I see absolutely no reasons to change. If you've missed a shot last summer and want to get into the Bitcoin shot now, well, lucky for you folks, because this certainly wasn't part of the plan. So this is more like we have a catch-up plan. A option B, a kind of a catch-up thing for those who missed it last year. This is a very great opportunity, only for those who didn't already take it last year. But in terms of probabilities, you were definitely much smarter to catch it last year rather than to, I don't know for what reason, but very low probability to just say, well, we're going to get these prices again. I mean, few weeks from now, I would definitely never have betted on these things, and no one would have. Yet here we are. So you need to understand that chaos is forever the market's language. The market will maintain pressure for as long as necessary, and I wouldn't be surprised if we maintain prices below the 40k level for a few weeks, because as long as we're below 40k, the market remains in an uncertain state. Do I think we can go lower? I definitely think there is a slight probability of this to happen because the daily chart puts new context boxes each and every month, okay? But for the entire month, until we get to March, okay, There is no new interesting Bitcoin prices to me until we manage to close daily candles below 31K and $500. As long as we do not close below these levels, I do not see another buying opportunity. The last one is the one that I already bought. So I think now we have a reasonable bottom and all of the signals are there. We've tried to accelerate to the downside and we failed right on the targets. We have now oversold cluster. Remember, we were lacking of signals. Now we have them. The actual indicator itself has detected the context and we are dealing with the moving average prices. So yes, the final excess structure that I forecasted earlier that year is totally canceled now as we've settled value below this level. But this doesn't change the higher time frames. To put it simply, okay, I am trading these higher time frame things by trend following the daily one. I got wrong with the actual maturity of the daily chart and got totally wrong-footed by these double weird kind of stuff pullback. But there is still far more gains to make on the higher time frames. So if you are patient enough and smart enough to understand that anticipating this thing is very, very improbable, and this is just part of chaos. Some things in market are unpredictable because they have naturally low probabilities to show up, but they still do show up a little once in a while. So what do you do with these events? Do you bet against them? Do you think that the market is forever going to be chaotic? No, it's not. The market sometimes is chaotic and you need to embrace that. So either you seize that as an opportunity if this suits your plan. If not, just make sure you don't die during those events. And the only way not to die is not to use leverage in Bitcoin. So I hope you understand that. Now you can take that analysis. Remember that this is a complex daily pullback structure in Bitcoin, and there could be some other ones, different structures on other assets, but make your multi-time frame studies. The coins that I like particularly now are the ones that have these multi-time frame trends opportunities, because they might have complex short-term reactions, but over the long run, the trends should prevail. Though, of course, this is not just, okay, nothing ever happened, just forget about it, it's going to be bullish, folks, whatever. There definitely has been a message sent, and as long as we're below 40K, the pressure will be very, very much to the downside, but I don't think there is downside potential. So bearish pressures without potential. This is what I think this market is all about. So it can last there as long as people fear of the downside pressure. It's a matter of sentiment, and the market makers are damn great manipulating you down this road. But is this a bear market? Well, in order to create a bear market, we need to get to the trend channel and we need to reject and make new lows. If this happens, oh boy, I'm going to be hell crazy bearish. Okay? Until then, what we have is just a very, very wrong footing pattern that's just changing the timings, not the outcomes. Over the long run, we just flattened the structure, but prices will be higher. Okay, that's it for today. Bye, guys.